Okay week, Aisha. Frankly, if you ask me, if I look at the real numbers and if I look at the real market action in large cap stocks, given that last week in middle of the week it appeared that banks participated, and then we had good flows on the FI front. Market, at least for benchmark indices, we saw a very flat kind of a start. And while last 2 weeks were about the election outcome adjustment, flows, bout of short covering, and massive comeback by retail investors, I guess markets now in next 2 weeks or next 3 weeks are likely to change gears, which is views and liquidity which have dominated the market in last 2 weeks. It really would be news and earnings. News in terms of next month you have budget and earnings, and then progress of monsoon. So rather than technical factors and liquidity factors, I guess markets are likely to move from opinion which would be formed basis on data, not on basis of liquidity, and that I guess could really be the change in terms of the market orientation. Now small cap stocks, you can argue back and say that okay, will the party continue? They're in a good spot, but do you chase the small cap stocks now? The answer to that is no. I see the following construct, Aisha. Global cues are also strong. Let's not undermine that, okay, this is only an isolated India rally. So global markets are strong. Last 2 weeks it was about views, flows, short covering. Next 2 weeks it could be results, budget, and it really would be hardcore macro news based on monsoon which will drive the market. So it will not just be pure liquidity. It will be perhaps the news and the impact of that on individual stocks which will set the tone.
Yes, indeed. All of those factors will closely be monitored by the market. Those are some of the important cues for the week ahead. But for the month ahead rather, but let's find out what's in store for the week ahead in terms of cues. Of course, you do have your monthly F&O expiry, but it's also important to track some global cues as the consumer confidence, the new home sales and jobless claims, some data coming out from the Eurozone with respect to the economic confidence, the BOE financial stability report, UK's GDP print, and then the first session of the 18th Lok Sabha as well that will take place, Nikunj. That will be some of the important cues.
If you take F&O expiry out of the equation, there is nothing big at least which is anticipated this week. But F&O expiry, I guess, would be important considering that next week, from next series, we move into what really could be called as the earnings calendar. And then for the next expiry, the budget really would be at play. So considering that this series has been an eventful series, this week's expiry in terms of what the directional sense we would get, I think would be important. Also, let's look at the FI flow. For me, that also is important. It is not a cue, but it is a data point which markets will look at. And this is where, if you frankly ask me, that number of 19th of June, it appeared that foreign institutional investors were really back with the bang. And the precursor to that on 14th and 18th of June also, those were impressive numbers. But if foreign institutional investors do not come back, then there would be a crowd which would be disappointed, because a lot of market men leaned back on the bullish side post 18th and 19th of June when the FI data came out, and which also coincided with the rally in the banks. So if you're really looking at one moving part, this week that moving part really could be that FI flow picture, which in a sense will be a mood indicator of the near-term direction. Why did banks go higher? FIs came back. Why FI back? Because they were short on India. But that number has not translated into any great, what should I say, great pictures so far. Even from 4th of June, the FI number is not very impressive. So for me, that in a sense becomes a near-term talking point also, that if FIs are back, if they are back, why the numbers are not reflecting, and when will the numbers really start reflecting, and if the numbers start reflecting, will banking stocks they rally? That in a sense is a short-term moot point which you need to consider if you're really looking at the near-term market action.
But then one's wondering, what's the strategy for the day? Because you've got expiry to deal with. It's going to be an important one just ahead of the budget next month.
So Asha, if you're long, you don't cut your long just because markets have rallied. If you are planning to initiate trades in small and mid-cap stocks now, this may not be the ideal time. So rather than chasing the market, stay with the market. Rather than trying to rotate it, I think it is time to maintain status quo. Sometimes doing nothing is also a strategy, and I think in this kind of a market, after the recent rally, doing nothing and not selling and staying with the market, and rather than trying to preempt the next 100 points or 500 points in the Nifty may not be the best strategy. The odds are, the technical odds, which is in terms of flows and the global cues, they are favorable. But soon market will move into from technical push to the news flow, news flow bracket, and that is where I guess markets may entirely hit a pause button. See, you cannot be bearish in this market because global cues are strong. You cannot be bearish in the market because local participation is strong. But after the recent run-up, if you're trying to chase the market, maybe the risk-reward ratio in the near term is not there.